Southeast Radio's Business Matters with Karl Fitzpatrick.
Well, for many, the money markets are too complicated to understand, and therefore many Irish people decide to avoid them altogether. However, the Business Post's Markets Correspondent, Kathleen Gallagher, believes that this should not be the case. Kathleen joins us now to explain how and why we should take an interest in the money markets. Kathleen, why is it important that the general public gains an understanding of these markets?
Hi, thanks for having me. Yeah, I mean, the markets, they can be quite confusing and they can feel very abstract, but they're actually a quite important metric in terms of getting a real life feel for what's going on globally. So, for instance, if you're interested in why the price of a bar of chocolate has gone up, normally you can see that reflected in cocoa prices before it's even happened. If you're interested in, say, buying a property, has the property market gone up or down? Again, those are things that you can find in the market. So it's very important for people, for businesses, in terms of gaining an understanding of what's going on in the wider world.
So what advice have you got for listeners to help them to create an interest in the markets?
Yeah, so I guess one of the things that I did when I first entered financial journalism, and I had no background in it whatsoever. I came from an English and philosophy degree and didn't really know what I was doing. I kind of set up a fake portfolio and just put some money into some different things. It was fake money. It wasn't really doing anything, but it just gave me a little bit of, I guess, momentum to start looking at things a little bit differently, to investigate different areas of the market and start to understand how it all fit in. So I would say to people, maybe just test it out that way. Start to look at something in particular and deep dive into one element and see if it takes your interest, and then you can always try something different.
And I know that you recently wrote an article about the lack of interest in the Irish markets from retail investors. Why is this the case?
Yeah, I mean, I think it's a really big challenge, and it's important to say this isn't just a big challenge for Ireland. It is a big challenge globally and in Europe in particular. But Ireland is a little bit further behind. And I guess it's a big financial education point. So kind of going back to what I was saying before, the lack of knowledge of the financial markets means that people just aren't very interested in them and they just don't get excited about them. And then also people don't really know what's the benefit to them to invest, right? So people have this feeling that their money is safe if it's just sitting in a bank savings account, but it's at risk if it's put into the investment market. And to an extent, that's true. But over time, it's important to have money in the market rather than just in a bank account, because the bank account's not going to pay you. That money's not going to be worthwhile once inflation takes its toll, versus the markets help keep your money working while it's just resting.
The language used around the markets as well can be quite confusing for people. Is that some of the problem?
Absolutely, absolutely. I mean, there's a lot of different words. The different elements of the markets, they each have their own particular lingo. So the bond market, notoriously difficult. It talks about basis points. It talks about yields. And then the kind of stock market, there's a lot of different words going on there. But ultimately, there are some basics that are kind of easy enough to get your head around. And I think starting there is a really good point. So for instance, the stock market, a stock, something like Apple, which most of us know, we can see that the share price moves up or down, and we can normally see what that has to do with that they have a really good version of the iPhone come out and the sales did really well and the stock price went up. That's kind of understandable because there's more demand for it.
And will changes to their prohibitive tax regime in the upcoming budget address this apathy, or does more need to be done to address the issue overall?
That is a very good point that I didn't raise earlier, but other systems, so for instance in the UK, they incentivize people to put money into investment wrappers. So for instance in the UK, they have this thing called an ISA, and the idea is that it makes sense for you to put your money into the ISA because it doesn't you don't get hit by tax, such as capital gains tax. In Ireland, it's prohibitive in terms of you're actually penalized if you're investing. So people are kind of like, well, what's the point then? So the Department of Finance has acknowledged this. They're doing a review into the entire funds industry in Ireland, and they said they're going to address it. And that is a big step. That's going to help things. But ultimately, if someone's not interested in investing or doesn't understand why it's important, removing a tax burden isn't really going to do anything. So there's a big financial education piece that needs to be done here as well.
And of course, the central bank has recently issued a warning about investment funds. What risks are they specifically concerned about, Kathleen?
Yeah, so this has kind of come about because more of the funding for everything in society, so small startups to, big property developments, it's coming from these investment funds which are run by asset managers. So it's basically private money is moving a lot more within the economy than it has in the past. And so regulators are looking at that and they're thinking that they need to think about how they regulate that, because the investment managers, their mandate is to make money for their underlying investors. So their decisions are based on, is it a good investment or a bad investment? And what that risks is if we have a downturn, say, in the commercial property market. So, offices, they're not being used as much. It's not a great market. The fund managers might decide to sell out because their investors are coming out of it. They need to raise some money. So they decide to sell the offices into a falling market, and then it starts to escalate and makes this whole downward spiral. So what the regulator is saying is the investment funds now need to think about the wider economy. They need to not just be thinking about their end investor. They need to be thinking about what is the impact on overall society if they make an investment decision like that.
So on that basis, are we likely to see the central bank introduce new rules that will mandate funds to consider financial stability and investor protection?
Yes, absolutely. I mean, this is something that the central bank was very clear on. They had a macroprudential conference, the ECB, so the European regulator. They've also been looking at the macroprudential regime, as they call it. And basically, they're trying to reassure the investment industry that it's not going to be a broad brush approach, but they have been very clear that they're going to institute some kind of requirement on them. And it'll probably be done sector by sector. But it's something that's definitely coming down the pipeline.
So turning to private market investments, the higher transaction fees and lower levels of transparency can both pose a risk to investors. But is it a risk we're taking?
Yeah, the private market space is very interesting. It's been a really growing part of the market. You kind of see less companies coming to the stock exchange, and so they're in the private space. Most of the big companies that you see today, so like the Apples, the Microsofts, they started their world as private. And so from an investing perspective, if you're trying to get that great growth from a company when it's at its very beginning stages, you need to look at that. Now, obviously, as you say, there's some elements of risk from that perspective. What they're doing, you don't see as much. They don't produce these big financial annual reports that everyone can see. The fund managers that can give you access, they tend to charge more because ultimately it is a slightly more riskier transaction. But you've got a portfolio as an investor. There's definitely a place for private markets. Most asset managers say to have a little bit allocated if you're a long-term investor. And there are ways to do it that aren't as risky or as costly from a kind of retail investor perspective. There's specific vehicles out there. So it is worth looking at, although, of course, it is quite risky, so it needs to be viewed carefully.
And within the context of an investment portfolio, why are private assets so important?
Yeah, so they tend to be very high growth. So if you talk to kind of a private equity manager, so the managers that put their money into private companies, they kind of explain to you that they've got like a bunch of companies, and ultimately not all of them are going to succeed. It's a bunch of different ideas. But the ones that do succeed, they just take off, and the returns are massive. So if you want to get that really big upside over a longer period of time, you should have an allocation into those markets. And ultimately, it is just a very big part of our overall financial market now, and growingly so. So it needs to be taken quite seriously.
And why are we seeing less scaling private businesses engage in IPOs?
Yeah, the IPO market has been really tricky. So you kind of saw things shut down a bit around COVID when, not a lot of things could take place because of the restrictions. And then we had the interest rate cycle. And so it's just been a very difficult market. Now, there have been some steps to kind of get back into there. You've seen some IPOs this year, and some of them have done very well. So there is some kind of slow steps to recovery. But ultimately, there's just a lot of money in private markets now. So unless you really want to or need to, the companies don't have to go there. They can do really well in the private market. So there's tending to take their time, just staying back there a little bit.
And Kathleen, on a broader note, what are the general trends within the markets right now?
Artificial intelligence, big theme at the moment. You kind of hear a lot of chatter around the so-called Magnificent Seven and the S&P 500. These are the really big tech stocks. They'll be household names: Apple, Microsoft, Tesla. The one that everyone pays a lot of attention to is NVIDIA, which basically comes up with the chips that can help artificial intelligence. So that's getting a lot of focus. And then the other thing going on at the moment is obviously interest rates. So interest rates are high. The ECB has said that they're planning to cut potentially as soon as next week, and that will start to trigger some different movements in the market. So there's a lot of anticipation about, is that going to happen? And then the companies that do well from the interest rate hikes, they start to fall back down a bit, and the companies that have been hurt by them, they'll start to recover a bit. So we should see a little bit of a shift come through at that point.
And finally, of course, 2024 is being touted as the year of the election, both in Ireland and internationally. But what impact, if any, could the results of these elections have on the markets?
Yeah, so it's a really interesting one. You know, as you said, there's major economies going to elections this year. And economists are a bit split on it. There's some kind of feelings that, you know, with a major economy like the U.S., when they go to an election, it could have a very big difference because the economic policy of the two front runners, Trump and Biden, is very different. So how that will impact business could have a swing in the market. That being said, kind of it would have an impact over the short term. Over the long term, do companies really think it's going to be a big deal? Not sure. And if you kind of look at in the UK, so that election was kind of a bit of a shock announcement. Their market, the FTSE, it didn't move much. So potentially not a huge impact, but you really never know until it happens.
Well, if you've just tuned in, that was Kathleen Gallagher, Markets Correspondent with the Business Post. And I'd like to thank Kathleen for sharing her knowledge of the money markets with us this morning.
Southeast Radio's Business Matters with Karl Fitzpatrick.